Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 15, Tax Day 2015. Okay, so inside the numbers tonight, short Netflix. Now that's a little bit of a teaser, and we'll get into that in a minute. We're going to talk about the SPY and the E-mini contract. We'll do crude oil. Interesting day today. We'll do gold and the U.S. dollar. All markets are moving as prescribed for the most part. Okay, so let's get let's flip over to the chart for a second, and this is the spider chart. But first, I want to talk about Netflix. So right off the bat, let's just take a look at Netflix, and we'll look at the after hours action and paint a picture for us here. Let's go to the hourly chart. And then we'll bring up the 24-hour session, and there you have it. Okay, so Netflix is trading up about $52, $53 in the aftermarket session, up at $531.50. Okay, that's after the close of the after-hours session at 8 p.m., it's trading at $531.50. Okay, back to the spider. The point I want to make is that Netflix missed their earnings number by a significant amount. So the point is that the analysts were extremely wrong, okay? Now, the stock went up anyway. And then they come and they fight for a reason why, and then they come up with a reason. International subscriber growth rate was accelerating and was great. But they don't tell you that it costs them an inordinate amount of money to obtain a subscriber internationally today. Therefore, it's an unprofitable business and probably will be for the foreseeable future. The point is, why was the stock up? Well, it was up because it was up. It doesn't matter why it was up. It's not up because of earnings. That was just proven tonight. Okay, they missed earnings. The analysts were wrong. Okay, even though we say Netflix missed earnings, the analysts missed earnings. Okay, Netflix earned what they earned. You've heard me say that before. But the point I want to make is a lot of people who may have been short Netflix, okay, based on the fact that it was overvalued, this, that, and the other thing, okay, are finding themselves in a tough spot because it's gapping up tomorrow and it's very strong and it's not going to stop anytime soon because there's no resistance up on the charts in this area since the stock's never been here before. So who knows how high it can go. These aren't the type of stocks you want to short. And I'm not saying anybody's short Netflix. I'm just saying shorting the market is a tough endeavor. And that leads me to my next thing. Okay, I get a lot of emails, not a lot, I get some emails from some subscribers that seem to always be short the market. They're always looking for the market to turn down each and every day, and they're looking for the big score in the downside. And while I can't give individual investment advice, I can only tell you what I'm doing, I can tell you what I see, and I can tell you what I think. And what I think is we're in a bull market, okay, until further notice. There will be a time to short. The time to short will be later this year, and it may be a very, very good short at that, but not now. I've been saying that the market's going higher. I've been telling you this since 2014. I said the market's going to make new highs in 2015. Okay, while this week I did have some downside numbers, and we came within 5 points on the ES of one of those numbers. The number was 1970. We came to 1975, and I thought that wasn't going to satisfy the downside. It may or may not still, but the point is the market was always heading higher after that event took place, if it took place. Okay, I've been telling you for months, new highs in 2015. I've been telling you for weeks, the market's going to pull back, but then it's going to go higher. We're going to achieve new highs. In fact, let's go back to, and we'll just get right into the SPY. Okay, our highs haven't changed. And by the way, there's a reason why. So all I'm trying to do is, by the way, those that are short, okay, those that like to play short, okay, do yourself a favor, okay. Over the last 5 years, go back and look at your trades, okay, and you tell me or tell yourself, okay, if you've won more on the short side over the last 5 years or lost more on the short side over the last 5 years as opposed to playing the market long. Keep in mind, over the history of time, the market is up about 75% of the time. Okay, over the last 5 years or so, the market is up even more than that. Okay, so the point is that in order to pick a short out, you have to be pretty darn sure that the market's going to turn down for more than a day. Otherwise, you're playing blackjack or craps or just putting money into a slot machine, hoping you're right the following day. It doesn't work like that. You know what I'm talking about. If you're trying to short the market, you know what I'm talking about. Some folks stop by, they pay attention to me for a few weeks or a couple of months, and then they start to get annoyed because I'm not shorting the market and I'm not negative and I'm not bearish all the time. So they leave and they're looking for the news that suits their persuasion. That's not the way the market works. We let the market tell us what to do. We never impose our will on the market. All right, that's the end of that soapbox for tonight. There's a reason why on the SPY I have these purple lines in as support areas that I was looking for in the downside. 207.50, 206, 04, 02.50. And then there's a reason why I don't have any lines on the upside. Even though we have resistance points on the upside, in fact, we're at one today, okay? This is going to be another resistance point, okay? We have this 212.97 is going to be another resistance point. The reason I don't draw those lines in, A, we already know the numbers. We've been talking about them for a long time. And B, okay, even when the market gets there, I believe we're going higher. I think when we get to those levels, this one, for example, like today, these up here, this one, it's just going to be a stopping point, and it's just a matter of time before the market gets up through those numbers and continues to make new highs until it's ready not to make new highs. And that's the market we're in, like it or not. It doesn't matter whether you like it or not. You just have to accept the fact. And in order for you to make money in a market like this, you just need to realize what it is, what it's going to do, and then you can decide how you want to play it. So we're not guessing anything. We're just using good old-fashioned common sense market and technical analysis to determine where we're going. And all my work, whether it's mathematical, whether it's cycle work, or anything in between, okay, Fibonacci retracements, money flow, MACDs, whatever I choose to use to get whatever forecast I'm making, okay, this is no joke. When I give you a forecast, I'm pretty darn sure that I'm right. In fact, every time I take a trade, I'm 100% sure that trade's going to work out. Now, I'm also 100% sure that every trade doesn't work out. I know that. But when I take a trade, I go into a trade with 100% certainty that I'm right and that trade is going to make money for me. If you can't be 100% certain getting into a trade and the reasons why you bought it are valid or sold it, regardless of which way it is, okay, then you shouldn't be taking the trade, right? So today we had a nice update. We got to the 2103 in the E-mini contract and about the 211 area in the SPY, and we pulled back. And that's a number in the ES contract that I had given you a while ago as one of the upside targets. There's another one which was at about 2115 that I said was a remote possibility, but obviously it's becoming less and less remote the higher we go. And if you remember, that was about a week and a half ago. I gave you the 2115, and I also gave you the 2103 a few times. So we went up to 2105 and changed today on the high. And, we'll see what tomorrow brings and Friday. This is still options expiration week, which means that there's a lot of stuff that goes on between the institutions taking certain stocks up and down at will. Therefore, the market does get a little squirrely during this week. But once this week clears, I think that we're going to see more upside, but we may see still some downside this week. We'll see. Weird things happen during options expiration week. In fact, today, Wednesday, I would have thought the market would have been up and down at least a couple of times today. This is also known as Whipsaw Wednesday, but that didn't even happen today. So these are a little bit abnormal markets, a little bit unusual, but I understand what certain people are thinking. They're thinking the market should be going down, the Fed shouldn't be doing this, all this stuff shouldn't be happening, earnings really aren't as good as they seem, the unemployment rate should be 5 points higher. I know all that stuff. It's nonsense. It doesn't matter. It's not that it's nonsense. All that stuff is valid, and it will be important later. When the market goes down, believe me, folks, all those things become important. They all become the reasons why the market is down, and they haven't changed. They're the same reasons they should be down. It should be down today. All those numbers are the same today as they will be 6 months from now, or 3 months from now, or 4 months from now. Okay, but those will become the reasons. Today they're ignored. Nobody cares. Okay, nobody cares. Don't fight the Fed. Nobody cares. And when the market is bullish and the undertone is bullish, you have to go with it. Okay. All right. So where do we go from here? Well, during the next day or two, it's anybody's guess, but higher prices are coming. Whether we slightly go lower or not and dip back down to retest this level, maybe at these moving averages, that's a possibility even tomorrow. It's certainly possible. I'm not saying probable. I'm saying possible. Where would your downside maximum target be tomorrow? Probably the 207.50. I don't see anything more than that. If it was more than that, then you look to your next target, which is 206. It's pretty simple, right? If we're going up and we break through the the highs that we had today, what's your next level? The double top right here, 212.27. What's that number? I think that was right. 212. There's that pop-up again. 212.24. So, we know that the market's in a stair-step fashion. It steps up and it steps down. So we know where the levels are on the downside. We know where the levels are on the upside. All right, let's move on. Let's go over to the gold market. Finally, gold got off the mat today. Had a nice up day. Woke up this morning and it was up. And stayed up all day. There's probably higher prices coming. I'm looking for 1212. But how much higher than 1212? Eventually, I do think we'll get there. I just don't know whether this move will get through 1212 before we have to pull back again. We'll have to see what happens when we get there. I would expect to be there. If not tomorrow, by Friday. That's my expectation for the gold market. 1212 by Friday, and depending on how we get there and the velocity and the volume, maybe we blow through it up to the 200-period moving average, which is at 1233. I think we get up to 1240, 1241 is actually a number I have. So I have the market when we do get there piercing above the 200-period moving average. But first we have to clear the 1212, and I'm not sure that's going to be so easy this week. I'm not really talking about anything beyond this week at this point. All right, let's, you know what, I'll just do GDX real quick. Same routine in GDX. I said when the gold market got a bid and the market got a bid, GDX would get a bid, and that's what happened today. Is there more upside in GDX? Yeah, you can probably get up into this 21 and a half area, maybe the 200-period moving average at 21.69. You'll probably get up to 21.75 if we get there, maybe even 22 on the upside. But you've got to have a lift in gold as well at the same time. And like I said just a minute ago, I'm not sure that we're going to get much above 1212 on this run this week. It remains to be seen. In other words, what I'm trying to say is I can't see, I don't have any indication beyond 1212 that I can give you and feel confident that I'm making a forecast. I'm making a forecast at 1212. Okay, let's move on. Let's go to the oil market. Oil had a rock solid day. And where did we go? Nobody should be surprised. Nobody out there should be surprised. We went right to the top end of the channel, pierced it a little bit, and finished basically on it. I mean, how much clearer could I have been that if we were going to continue higher, that's where we were going to go? Can we go higher? We can go a little higher. On another spike, we could probably get up another $2 or $3. And that would probably coincide with some kind of geopolitical news, Iranian news, some kind of Middle Eastern / geopolitical event or news item that becomes the excuse and the reason that we can rocket oil up a little higher. Outside of that, now it's overbought and we're going to have to pull back a little bit, but that's not to say we can't make it up to that 58, maybe even $60 level. We'll have to see what happens over the next several days. But, we were in up until 53 and I didn't see this. I couldn't see it. I didn't have an indication. I didn't have a forecast saying that this should happen because of X, Y, and Z. So we only had it till 53, but that's okay. There's another trade around the corner. I guarantee you one thing. Okay, I can't guarantee you which way any market's going to go tomorrow, but I can guarantee you one thing. There's another trade around the corner. There's going to be plenty of trades tomorrow and Friday and Monday and beyond that. So that's a story on crude oil, top of the channel, no surprise. It's pretty much working out. I mean, as long as we're able to identify the stopping points on the up and the downside, and then we can see a subsequent pattern develop after that, we can usually catch the next move, and that's what I'm looking for now. The next move in my mind is probably going to be on the short side, unless we see some kind of a pullback, a shallow pullback off of this level here from today, then I might look for higher prices. So that's why we'll just see what happens the next few days and how the pattern develops. Let's go to, let's see, the US dollar. Again, another market that did exactly what it was supposed to do. It did exactly what we said it was going to do. Okay, the dollar was down today, and I think there's more downside to be had. Okay, I said we were at $100. Remember when I said it last week. We were at 99 and change. We were hovering around 100. I said the market pierces over 100 and closes hourly and then daily below 100. You're going to go back down to 98, maybe lower. And that, I believe I gave you that Thursday or Friday of last week. And here we are, Wednesday at 98.59 as we speak now. And I think that there's lower prices heading our way down to the farthest I can see is about 98. Could be lower, but that's all I can see. So yes, that would be a forecast down to 98. But it was a forecast from up here. I'm not telling you to sell the market short from here down to here. I'm saying I told you the market was going to do this up here, and here we are 3 days later down here. So that's the value of some of these forecasts. Okay, so I had a soapbox tonight. I got that off my mind. We're doing well with the markets. We're navigating correctly. We should be, even if we're stutter stepping here and there based on a particular market, you're mainly on the right side of the market by paying attention day in and day out. So hopefully this has been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.